Okay, so today I'm here with Ravi Lockyer, CSS's head strategist, and I thought it was could be important to discuss Foxtons. They've had a trading statement today. So Ravi, Foxtons, stock we know very well, obviously both living in London. What's the view on the trading statement?
Well, I viewed this statement as positives and negatives, a bit of a curate's egg, a bit of a mixed bag. There's some good things in there, there's some not so good things. I'll run through the good things first. The expansion program is underway. They're rolling out new sites, opening new offices. The company's gaining market share in a number of areas, and we can see that the company is close to making results for the year, meeting expectations. Those are the good things. The not so good things, the company has said that within central London, which is their core franchise, transaction levels have been a bit sluggish. People have taken more time to absorb the tax changes of last year and taken more time to make decisions on whether to add or to reduce their property holdings. So I can see a mixed bag here, but I'm pleased with the numbers and I'm pleased with the strategy of Foxtons.
I mean, Foxtons down 5.5% currently, has dropped around 15% in the last few weeks. The simple question would be, is now time to buy?
Yeah, the stock has sold off from around 280 after the election. I think we need to have a look at the context. They were depressed a year ago after the stamp duty changes. The Scottish referendum got in the way. They were sold off heavily going into the new year. After the election, the stock had a massive bounce. It was the perfect thing to own for the election result that occurred. The stock was bid up to as high as 280. Since then, we've had what's been a more sluggish picture in London. The company's stock has come down quite significantly, around 70p per share. I see this company as holding its earnings, at least for this year. The forecast is around 12 to 13 pence of earnings. I think the earnings will be flattish relative to the 14 financial year, which was a record year. Having said that, I think this is a good entry level, notwithstanding that the earnings are likely to be flat over the forthcoming financial year.
So is it a capital growth play? Is it an income play? Is it a recovery play? I mean, the general consensus, London, Rightmove have recently had a poll suggesting that house prices in London will top £1 million by 2020. That's up from about 620,000 now. So is this a longer term, medium to long term play?
This company, interestingly, has facets of both. They pay a special dividend. They pay two dividends a year on top of the special dividend, which total almost the earnings per share. Around 11 pence of payout and around 12 to 13 of earnings. So the company is a high yield stock. At the same time, it offers growth via the new branch rollout and via the pickup in market share that they've seen relative to some of the probably more weaker competitors. It's a very divided market. Foxtons, typically in West London and Central London, has outperformed other smaller rivals in the same area. At the same time, they're growing into areas where they're more established players. So I could see a revenue growth, which in the recent Q3 was up 8.8%. I think the revenue growth was very good. But I can also see that the earnings are likely to be flat until London volumes pick up a bit more.
So a pure London property play? Or?
It is at the moment, yes. I think it is mainly London, West London, and they're expanding into Croydon and Barnes and a bit further out into the sort of more satellite areas.
Okay, I understand they had a few issues regarding landlords, and they had this situation with some bad publicity and some legal challenges. I mean, obviously that's a potential risk for the company.
The company has always had a very hard driving focus. It's always pushed its luck a little bit in terms of the sort of deals that they've done. They do charge at the very premium end. They charge more than other brokers. They need to be cognizant of this, given now that they're a listed company. Whereas it was less important before, it's very important these days that the company doesn't get wrapped up in any legal entanglements, and that it observes good standards of corporate governance.
Okay, thank you, Ray. Well, obviously information to take note of. If anyone wishes to contact us, obviously Collins and Ravi Investments, feel free to visit the website www.css-investments.com. Thank you.